When analyzing a vacation rental investment property in Cape Coral, it's important to consider a number of factors that impact the property's potential return. Cape Coral is unique in that it allows for short-term rentals as brief as 1 week, which makes it an attractive option for investors looking to purchase vacation rental properties. The first step in analyzing such a property is to determine the average nightly rent. This figure is a combination of in-season and off-season rental rates, with the former typically having a higher nightly rate than the latter. Next, it's necessary to determine how much vacancy the property will experience. Typically, this is between 40 and 60%, dependent on the property. Once the average nightly rate has been determined, it can be multiplied by 7 to calculate the weekly rent. Then, take this weekly rent number and multiply it by 52 and adjust for the anticipated vacancy rate to determine the property's gross annual income. In addition to rental income, investors must also consider a variety of expenses, including property management fees, permitting fees, maintenance fees, utilities, insurance, taxes, reserves, etc. After adding up all these expenses, you need to subtract it from the gross income amount to determine the net income or the amount of cash flow expected to generate from the property each year. Then, to determine the return on investment, the net income is divided by the total purchase price. An ROI between 5 to 10% is generally considered good. It's worth noting that aside from monthly cash flow potential, rental properties also have the potential to appreciate in value over time. For example, even at a 5% annual increase, a $500,000 home will be worth approximately $638,000 in 5 years, resulting in a $138,000 profit as well as the rental income. Here's an example. All right, what's up everybody? So this is the example part of the video. This is going to be uncut, unscripted. I got a couple things pulled up here that we're going to go ahead and analyze an investment property. So here we are with the property information. It is a 3-bed plus den, 2-bath, built in 2006. Approximate living area is right around 2,000 square feet. List price is $599,900. 3+1, 2 baths, pool home on a freshwater canal in Cape Coral, Florida. So we are going to list price $599. Let's analyze this. So $599 list price. Let's say we pay $580. Paid price $580,000. Now, for this example, we're going to assume that you bought the property in cash and you don't have any financing. Those financing numbers are going to have an effect on your gross and net return as well as your cap rate. So the cap rate ROI is going to be affected as well as your net annual return. The gross will be similar, but you're going to have more expenses in dealing with the mortgage payments. So your net is going to go down. The property is, any more information on here that we need? No. So let's go ahead and plug it into our rental calculator. Our average nightly rent here is giving us $281 with a 70% occupancy rate. So we're going to take that over to our calculator. We're going to put in a purchase price of $580,000. We need about 3% for closing costs, so $580,000 minus 3%, that gives us $17,400 closing costs, a $500 home inspection, as well as $10,000 of furniture, puts us at a total capital investment of $607,900. We're going to plug in the average nightly rent amount of $281. That puts us at a weekly rent of $1967. We're going to multiply this out by 52 to get our gross projected annual rent amount before we calculate in our occupancy percentages. So as you see, this number is here in this box. Projected occupancy rate is 70%. So we're going to plug that in here. That gives us 35 out of 52 weeks rented. 35 out of 52 weeks rented with a gross revenue of $68,845. Now, the expenses that are associated with a vacation rental, you're going to have an 18% management rental commission, about $200 annual permit and licensing fees, $1,300 yard and pest control, $1,300 pool and maintenance, about $4,500 electricity. That's going to vary dependent on how much your tenants use. Water and sewer of $1,500, cable and internet of $1,300, and property taxes is going to vary as well. For this example, let me actually... All right, we're back. So I got the actual property taxes on this home. It's going to be about $4,500, so we're going to plug that into the box here. $4,500 property taxes, about $6,000 homeowners insurance. You're also going to need short-term rental insurance as well as other liability insurance for having a short-term vacation rental. All those numbers are included here. And then you're also going to want to include for maintenance and reserves. That way, if anything breaks on the property, you're factoring that into your expenses as well, instead of having to deal with it later if something comes up. So with all of these numbers, our total annual expenses for this scenario are at $38,192. So we have a list price of $599, a paid price of $590, and average nightly rent of $283, I believe. Yeah, $281. Okay. So $281 average nightly rent. We have a 70% occupancy rate, so that gives us a gross. So occupancy rate of 70%. This gives us a annual income of $68,845. And then to calculate the expenses and cap rate, we're going to include that all as well. Total annual expenses, $38,192. Total annual expenses going to be $38,192. Okay, and then this puts our, so to determine the net annual income, you're going to take this gross annual income and subtract it by the total expenses. So we're going to do that here. 68,845 minus 38,192, and we're going to cash flow $30,653 on this property. Net annual income, $30,653. Boom. And so then how to determine the cap rate, as you can see here, that number, the 30,652.9, which rounds up to the 30,653. This property is projecting about a 5% cap rate. To determine that, we take the net annual income and divide it by the paid price. So we're going to divide that by the 580,000. And you are going to get 36,553 divided by 580,000. And you're going to get your 5.29% about. So you're going to just round this decimal place over to get a 5.29% cap rate here. 5.29%. Boom. So that is how, guys, we determine a rental property. We calculate cap rates and we calculate expenses, income ratios, occupancy rates. If you guys are looking to purchase an investment property in the Southwest Florida area, I would love to assist you. All my contact information will be in the outro, so I'll see you guys there. Real estate can be a powerful tool for generating wealth and building financial freedom. If you're interested in purchasing an investment property in Southwest Florida, I would love to assist you. My name is Braden Milner, and I'm with Florida Future Realty. Feel free to call or text me at 239-634-8639 or email me at contact@bradenmilner.com. You can also visit my website, www.bradenmilner.com, for my full list of seller services, property search, educational resources, and much, much more. I look forward to seeing you guys in the next video. Thank you for watching. Bye.